time for our next big trade, where we bring you the boldest calls on Wall Street and the people behind them. Tesla, this is a bold call. Down hard today, and they've got the shareholder meeting tomorrow. Our next guest does not trust the math behind Tesla's first ever quarterly profit reported just last month. He's Donn Vickrey of Gradient Analytics, and he joins us now. Donn, we're so glad you're here. So you don't trust the math. Why not?
Well, thank you very much for having me on today, this afternoon. What we look for at Gradient is we look for companies with sustainable earnings. And so on the top line, we like to see numbers that are produced from, purely from, sales of the company's products. And that's where problem number one is with Tesla in our book, is that, about $68 million of their sales reported last quarter came from, the sales of zero emissions vehicle credits. So that's line item number one that causes us some concern. Also on the income statement, one of the largest contributors to their profit last quarter was the gain on the revaluation of the outstanding warrants that the U.S. government holds. And that's also something, it's just purely a one-time gain that's not going to happen again. On the expense side, we've got two main concerns right now. One is the warranty costs associated with the sales of Tesla vehicles. And right now they're accruing a warranty at about the same rate as you would expect for GM or Ford or another major automaker. The problem we have with that is that the technology is so new. To assume that their costs are going to be about the same as an established manufacturer selling, a derivative of a product that's been around over 100 years, we don't think that's reasonable. And under U.S. accounting principles, under GAAP, you're required to make a conservative estimate. So if the actual amount of warranty expense is unknown, as it is in this case, you're required to be conservative, and we'd rather see you overstate the expense rather than understate it. And we think, particularly with the cost of some of the components that are being guaranteed, like the batteries, that 1.5% of sales is not an adequate accrual, most likely.
Sales have been strong. I mean, they've had quite a bit of success, but I know that you're concerned about this demand not being sustainable. Why?
That the sales of the car may not be sustainable, or the earnings.
The sales of the car.
Earnings, sales of the car. That'll be an interesting. It'll be interesting to see how this pans out. A concern that we have about that is that right now we're seeing sales after a period of pent-up demand. They've been taking deposits for several years now, and finally people are able to take delivery of their Model S. And once that pent-up demand is met, it'll be interesting to see if they can really maintain that same level of sales. The U.S. market appears to be reasonably robust. The next market that Tesla's looking at, Europe, right now is not in a particularly great state. And so the ability to make a push into Europe and help boost sales that way, I think, could be challenging.
Yeah, Donn, we've only got about 30 seconds left. Are you concerned at all about that headline from a month ago where it looked like they accelerated some sales to make the number for the quarter and get up to 4,500? Do you think that happens again?
Are you referring to that email that was
Correct.
reportedly
and again, we've only got about 30 seconds here, Donn.
Right. I have some concerns about that, but to be honest, since there's no way to validate it one way or the other, I prefer not to speculate.
Sure, understood. All right, Donn Vickrey, certainly with a contrarian call saying sell Tesla. The numbers don't add up. We appreciate your joining us and explaining the thesis. Thanks for being here, Donn.